Hi there, welcome to The Close. I'm Lindsay Biscaya in for Morella. Today, markets will be closing in half an hour from now. So first, let's get some of the stories we're following for you in the BNN Bloomberg newsroom. The European Union says it will suspend the ratification process of its trade deal with the U.S. Now, the move comes after the Supreme Court blocked parts of President Donald Trump's trade agenda. Trump has since said he will raise global tariffs to 15%. Meanwhile, the European Commission says the U.S. needs to honor its tariff deal with the EU, adding that sudden, unpredictable levies disrupt markets and supply chains. Loblaw shares are moving higher after the corporation says it will invest $2.4 billion in Canada this year. The plan includes new Shoppers Drug Mart pharmacies and discount grocery banners such as No Frills. The company is also continuing construction of a large automated distribution center in Ontario. Loblaw says the spending will create 9,000 new jobs and is part of its broader 5-year investment plan. And Canadian energy company Emera reported weaker than expected fourth quarter results with adjusted profit coming in below analyst forecasts. Those results were weighed down by its Nova Scotia Power and New Mexico gas operations, as well as underperformance in its Florida utility unit. The company's Canadian electric utilities also saw a sharp drop in profit. And we're also watching shares of Domino's Pizza, which are edging higher today. The pizza company reported fourth quarter revenue of $1.5 billion U.S., beating analyst estimates and rising more than 6% from a year ago. U.S. same-store sales also rose, with franchise locations outperforming company-owned stores. We'll take a quick look at the TSX here. It reached a bunch of new record highs last week. We're watching for that today. So far, it doesn't look like that's going to happen. It's trading down by 0.1% at the moment. Kind of a similar story if we look at markets south of the border as well in the U.S. Seems as though investors are a little warier today. Another AI sell-off, perhaps. The S&P 500 down by more than a percentage point. The Dow Jones down by a percentage point and a half, and the NASDAQ down by 1.2% at the moment. We'll continue to monitor that for you. President Donald Trump is pushing ahead with fresh tariffs despite a Supreme Court strike down on Friday. And for more on where we stand now, let's bring in Derek DeCluet, executive editor for Canada at Bloomberg News. It's good to see you, Derek. So lots to go over here. I guess update us first on what happened since Donald Trump's speech since Friday. He's increased those tariffs already to 15%. That threat, I guess.
That's right. So he gave the speech on Friday, said the 10% tariff. Then on Friday night, we got actually pretty big news on that the USMCA exemption that applied to Canada and Mexico would continue on under this new tariff. So that was really good news for Canada. It really meant that Canada's position in this tariff war had improved a little bit. It certainly wasn't getting any worse. And then the president on Saturday morning said, well, I've been thinking about it and I'm very upset about the Supreme Court decision. So I'm going to go with 15%. And we're still awaiting an executive order on that. Now, it's entirely possible that the details of that will be exactly the same, that most things will still be able to be shipped into the U.S. from Canada tariff-free, that exemption that's existed for about a year, almost a year, will keep going. But we're kind of awaiting some confirmation on that. And then, of course, there are the trade relations with the U.S. and the rest of the world to talk about.
Yes, and there's also been a lot of reaction to these tariffs, the 10%, now the 15%. What has reaction been like globally to all this?
Yeah, I mean, it's putting some of the trading partners who did try to cut an early deal last year with the Trump administration into a bit of a quandary. There's a degree of confusion around it because for some of them, it means that the deals that they thought they had are no longer exist, or these tariffs might be stacked on top. The European Union is a good example. They, of course, cut a deal last summer that was, quite criticized within Europe for how one-sided it appeared to be. The EU has yet to ratify that tariff deal with the U.S., and they've now sort of pumped the brakes on it. Said we need more information on what this 15% represents and how this is all going to work Of course, that matters a lot for Trump because these deals with the European Union, Japan is another example, came with very large investment pledges. These pledges are very vague, but they essentially appear to, or at least the president says that they obligate the trading partner to put money into U.S. assets. And so that's all very up in the air right now.
Yeah, a lot is up in the air right now, I guess. I mean, it's interesting when you talk about these different countries that have these trade deals with the U.S. Like you touched on what it means for Canada off the top. Still need more clarity, really, I guess, in terms of what this will look like. But was Canada maybe smart in a way to hold back from making a deal with the U.S., or does that really matter at this point?
I mean, I think that tale is still to be told. I mean, we have a much bigger thing lying ahead of us, which is the review of USMCA and how what sort of terms the Trump administration will look for as they try to reopen that deal in the year ahead. But yes, it does sort of seem like perhaps taking the position that no deal is better than a bad deal, at least for the moment, probably worked out somewhat because at the very least you can say today that the Trump administration doesn't quite have the same negotiating leverage that it had before the Supreme Court decision on Friday. And of course, that is a big part of the reason why the president is so upset about it and has posted on Truth Social and other platforms multiple times how frustrated he is with the court decision.
Yeah, it's going to be very interesting to watch how all this plays out. And as you mentioned, we've got that upcoming renegotiation of CUSMA happening in the summer. I'm sure that will be interesting, too. OK, Derek DeCluet, executive editor for Canada at Bloomberg News. Appreciate you joining us. Thank you. Up next, stocks are sliding to start a busy earnings week. We've got more on that right after the break. Stay with us. Loblaw says it will spend $2.4 billion in 2026 to build 70 new stores. Some of that money will also go toward renovating nearly 200 other stores and expanding its supply chain capabilities. The plan includes new No Frills, Maxi, and Shoppers Drug Mart locations. And for more, we were joined earlier by Mike Von Masso, a professor in the Department of Food, Agriculture, and Resource Economics at Guelph University.
As they open new stores, that they would likely be the discount brands. As they're refurbishing stores in certain neighborhoods, they'll probably refurbish some of those to discount and just simply leave the others as they are under the current flag. So this isn't a huge surprise. They'd previously announced their automated distribution center as well, and part of that investment is in there. So to me, this is really an announcement of the size of the commitment as part of an ongoing $10 billion over the next 5 or 6 years, and going in a direction that we very much expected them to go. You know, we see a growth in pharmacy with pharmacists allowed to do more things, an aging population. That's not a surprise. And that move to discounting grocery is very much reflective of changes in consumer behavior as well.
Certainly, I've seen at least one and maybe more former Loblaw full-service stores in my Toronto area turning into No Frills. People just don't want to pay any kind of premium, it seems, for food right now.
Yeah, but we've seen several years of climbing food prices, and depending on the demographics in the neighborhood and depending on competitors in the neighborhood, they're saying it's a strategic advantage for them to be a No Frills or a discount brand rather than sort of that mid-level brand that they've been historically. People are looking for value. They're not as worried about variety and choice. They're looking for value, and this strategic response reflects that.
Yeah, I'm trying to think. I guess it's cheaper. You're not at a No Frills store. You're not offering an actual butcher's counter, and you're not offering a bakery counter. Generally, you're not anyway. All those things. So you less staffing that way.
Well, there's less staffing. There's less variety. So there's less the more inventory, the more variety you have, the more waste you'll have as things as get beyond their best before date, and consumers are less inclined to buy it. You know, they do other things. You know, when we go into a Loblaws, for example, we expect to buy bananas that are ready to eat, whereas if we go to a No Frills, maybe they're a bit greener, and that allows them to say, well, we'll have less waste in our bananas in No Frills. So there are some differences. You know, you go into a Loblaws, you might see 50 different types of mustard. If you go into a No Frills, you're not going to see that level of choice. So there are differences that allow them to be more affordable. The experience is different too. The aisles are a bit more narrow and that sort of thing.
And certainly, you know, do we need multiple types of mustard? Yeah, a lot of this choice is kind of unnecessary, probably. Yeah. One thing you probably remember, it's probably more than a year ago now, that they announced they were going to try out these no-name-only stores, rather like a European Aldi or a Lidl, with a heavy emphasis just on store brand. But that seems to have fizzled. I've seen reports that they've been closing those in Ontario. I asked the company, where are you going with it? And I haven't heard you back. But maybe that was too hardcore for shoppers.
Well, I think it depends on the market. I know one of the stores in Eastern Ontario is still open.
Okay.
They have closed two west of Toronto. And again, it wasn't exactly the sweet spot that consumers were looking for. I don't think it necessarily says that people aren't looking for discount in those markets. One of the markets that they closed a no-name was Windsor, and we know Costco is building a new store in Windsor. So it was maybe the neighborhood, or again, maybe that's getting too constrained relative to choice, and wasn't the sweet spot for what consumers are looking for.
Have they dodged the bullet now when it comes to controversy over alleged lack of competition in Canadian grocery retailing? I mean, the Liberal government under the previous Prime Minister was quite outspoken on this, but we haven't heard much lately.
Well, I think there's growing recognition that the grocers are not contributing significantly to food price inflation. If you look at their margins, the growth has been relatively small. The absolute value of profits is going up because of the value is going up. And so as we're getting more into this, we know that most of these are supply-related issues. There are still people banging away at the grocers. I saw something from the Ontario NDP saying stuff about excessive profits, but I think Canadians are sort of starting to listen and say these aren't costs going up across the board. These are specific things that are going up in price, and there's a good reason that we can understand. Did the grocers contribute to it? Maybe a little bit, but not significantly. And so, these things are going to bubble up occasionally as we get food price inflation numbers. But I think that as the largest grocer in Canada, Loblaws is always going to have the target on its back relative to charges of concentration.
One last thing. Have you done any work, you or your colleagues, on self-service checkouts? Because apparently the restaurant industry is finding that people order more when they feel they're not being watched. They order those extra fries or whatever. But consumer behavior in the grocery store, I know it has been linked to higher levels of theft.
Well, yeah, we do know there are higher levels of theft, and we've seen some stores actually put very much more theft prevention in as prices have gone up. We've seen stores with gates and much more and security guards. I'm not sure about whether we see bigger shopping carts with self-checkout. I would actually probably guess anecdotally that the average cart is a little smaller if you go through self-checkout, and people with a really full cart will still go through the cashier.
That was Mike Von Masso, a professor in the Department of Food, Agriculture, and Resource Economics at Guelph University. Up next, stocks are sliding to start a busy earnings week. We've got more on that after the break. Welcome back. Canadian and U.S. stocks are sliding today as investors await earnings from Canadian banks and NVIDIA this week. And for more on what he's watching for and his stock picks, here is Alan Small, Senior Investment Advisor at Alan Small Financial Group, IA Private Wealth. Good to have you in studio.
Good
Thanks
afternoon.
for coming in.
Nice to be here.
We've got a lot to go over. I just wanted to ask you first off the top about Loblaws. It's one of our big stories today, the expansions, the new funding that's put in, the renovations, new stores coming. Does any of that news make the stock itself more attractive to you?
To me, it's difficult, right? You know, you're looking at a stock that's made a new 52-week high today. Stock trades at around 28 times forward earnings and gets a little bit pricey around these levels. You know, you could look at other names that have seen their prices in other areas of the market, more pro-growth or more growthy names with, I guess, less PE. So when you look at a price multiple of 28 times versus a tech stock, for example, maybe trading at 21 or even under 20 times earnings, tough to look at Loblaws if you're looking for growth in a portfolio. I just think there's other places that you may want to look at this point in time. But obviously a great name to own over the last little while, as you can see by the chart there. But right now, I think it's just a little bit pricey. And maybe on a pullback, you can maybe look to take a position.
Okay, and we're going to get to your stock pick soon. But just first off, talking about earnings, we've got a lot of earnings coming up this week. Some of the big Canadian banks are reporting this week, I believe Tuesday and Wednesday and Thursday. Anything in particular you're watching out for? Yeah,
so Canadian banks, again, an amazing sector. Last year, one of the better performing sectors of the market. Really, all the major banks, the top five, and even if you include National Bank, they all came into this year at all-time highs, whether it's CIBC or Royal, TD. TD's had an incredible run since the days of their money laundering issues. Look where they're sitting at now, you know, almost a double from those levels. So I think the bar is set really, really high for these names. So I'm a little bit cautious coming into the earnings that they're going to report. You're obviously going to look at net interest margin. You're going to look at what these banks are setting aside for bad debt. One of the strengths that we saw last quarter, you know, capital markets, wealth management, how are those things doing? And I guess last but not least, how are the banks faring outside of Canada? A lot of them have continued to expand outside of Canada. Scotiabank being the most recent, talking about, you know, really focusing on North America, but also obviously U.S. How is the Canadian lending business going to go this past quarter? So with an economy in Canada growing maybe 1%-ish, how are the banks faring here? Are they still lending money as they were before? So a lot to look at, but I think the bar is set pretty high, and I would not be surprised to see a bit of a sell-off on the earnings. Hopefully they come in strong, but I think the market is expecting good things.
Okay. NVIDIA also reporting this week, all eyes on this, of course. What do you think about this company, what you're expecting this week, and whether they can extend that growth that we've been seeing?
Yeah, again, another name that the bar is extremely high. Last report just blew the lights out. And NVIDIA really at the heart of artificial intelligence, the chips, biggest company in the world, makes up about 7% of the S&P 500. At one point, it made close to 9 or 10% of the S&P 500. This is a name that has been hanging in there, even though we've seen a bit of a sell-off in tech. NVIDIA is still hanging in there. I'm looking for another great report. I'm looking for another a blowout quarter. The question is it going to be good enough? Will it be good enough to see a surge higher in the share price? That's a tough one. And NVIDIA is a name that, even though right now the name is actually cheaper today than it was a year ago, and that's how much their earnings have grown, it's still a name. It's still a difficult name to get into before earnings. I think the earnings are going to be good. The question is, how's the market going to react? That's the bit of the unknown right now.
It is, and the market's been reacting in interesting ways over the last couple of weeks, right? With a lot of earnings coming out. Also, that software sell-off we saw a few weeks ago. So let's get to some of your stock picks, because you see some names where you think the sell-off was kind of overblown. So Microsoft, you want to start there?
That's right. So Microsoft, and I look at Microsoft. Yes, they are software, but they're also AI. So the talk is that AI is going to replace or take business away from the software companies. Well, Microsoft's a bit of both, right? They have their data center, their cloud, and I think it all started when they reported last when I think it was Azure growth 38%. Market was expecting about 40%, and then we saw the sell-off. They talked about Copilot. Well, 15 million subscribers. Well, sounds like a big number, but when you look at their overall business, it's not a big number at all. So Microsoft's a name that sold off, I believe, too much from the highs, down about 30% from their 52-week high or all-time highs, in and around $555. Today, well under $400 a share. Now, I think the sell-off is overblown with Satya Nadella, a fantastic CEO, great management, all the people over at Microsoft. I just can't believe that this name is going to stay here or even go lower. I think this name is poised to move higher. We'll see what they say next in their next report, but I think it's a great name to take a look at.
A similar story maybe for Meta, do you think?
Absolutely. Yeah. Another name that has sold off a lot based on the amount of money they're spending, right? Their CapEx, what they're spending on AI. That's really the culprit and why their share price has come down. You could say the same thing for a name like Amazon, which I also like. When they announced how much money they're spending and you realize how much free cash flow they had, it's pretty much taking all their cash and all the cash that they're making, they're spending on AI. So a lot of these names I think have been sold off, but I just don't think for valid reasons. Maybe a bit of a sell-off, but I think it's well overdone. And I think you're going to see these names bounce at some point in the future.
Do you think people are just being a little overcautious about this spending we're seeing from those companies?
Well, yeah, and I think, they're kind of, it's that shoot first, ask questions mentality.
Yeah.
And I think a lot of the spend right now for these companies, they're trying to justify it. Should they be spending 180 billion, 200 billion? These numbers are getting higher and higher and higher. And I think investors are just wondering, and analysts are wondering, are they getting return on their spend? Mm-hmm. And that's the main question for a name like Meta, for a name like Amazon. And you mentioned the software name, ServiceNow, Salesforce going to report earnings this week as well. A key name. We've been basically selling off, or the market's been selling off these software names. But a name like Salesforce, can they tell the world their story? And is their story going to be good enough to see a rebound in the name? Trading at lows we haven't seen. I don't recall seeing these lows in either quite some time or ever. So will it get a bit of a bounce when they report this week? What are they going to say? Is AI taking over, or can they differentiate themselves from what Anthropic is saying and their Claude plugins that have been announced recently?
Another stock pick for you is Palo Alto?
Yes, again, software.
Right.
And this is why stock is down, right?
Yeah.
Anthropic has recently announced that they have this thing they can give to companies where they can actually look at their own security and see if there are any bugs in the system. And so that was announced. CrowdStrike, Palo Alto, these names, big cybersecurity companies out of the U.S., selling off on this perhaps possible, maybe just start of some sort of plugin that these companies can use for cybersecurity. I don't think anywhere near what a name like CrowdStrike can do, Palo Alto can do. These companies are a lot more than just a plugin. So for me, again, overblown.
Okay, Alan Small, appreciate you coming in studio as always. So good to see you and get your insight. Thank you.
Thank you.
And up next, we've got the closing bells on Bay Street and Wall Street. Stay with us. Here are the closing bells at the NASDAQ. Times Square Alliance is ringing the closing bell. At the New York Stock Exchange, Information Technology team rings the closing bell. And at the TSX, Petrus Resources is celebrating the company's 10th anniversary of being listed on the TSX. You're watching The Close on BNN Bloomberg. I'm Lindsay Biscaya. Here's how we close the day on Bay and Wall Street. Okay, and now let's take a look at where North American markets closed. Closing down today, the TSX down by 0.1%, S&P 500, NASDAQ down by more than a percentage point. A lot of investors have some concerns over AI, big spending right now. It seems as though a bit of a sell-off happening because of those concerns. If we take a look at some of the big moves of the day, starting on the TSX, B2 Gold shares were up today after a bit of a management shakeup with the current CEO retiring. A new name announced to step in. B2 Gold, one of the top performers on the TSX today, finishing the day almost up 7%. Shopify, one of the biggest laggers today on the TSX, being roped into a more general sell-off tied to renewed anxiety over AI. We, of course, saw that in the markets today, finishing the day down more than 7%. And Go Easy, another lagger on the TSX today, down almost 6% at one point this morning, which was the most in 15 weeks, finishing the day down almost 8%. 0.5%. Elsewhere, we were also watching shares of Eli Lilly today. It was up, finishing the day almost up 5% after its competitor Novo Nordisk reported that its weight loss drug candidate underperformed Lilly's drug in clinical trials. And you can see investors reacting to that today. And for more, we are now joined by Bloomberg's equities reporter Stephanie Hughes to break down some other big movers that we're watching. Stephanie, always good to see you. First up, Fortuna Mining, one of the top performers on the TSX today. What happened there?
Absolutely, Lindsay. So it's been a gold and silver kind of a day, with Fortuna Mining gaining as much by 9%, I should say, bringing that stock to a fresh all-time high. And it's been gaining alongside other gold and silver names and spent most of the trading day today among the top TSX performers, really fighting it out for that top spot with other gold and silver names. And all this is because gold and silver prices themselves are also gaining amid this renewed bout of trade uncertainty coming from the U.S. after late last week. The Supreme Court struck down U.S. President Donald Trump's global tariffs. So then we also got some updates over the weekend, including the White House swiftly saying that they would replace the previous tariffs with a new across-the-board 15% levy on U.S. imports. Now, it should be noted that goods trading under the USMCA agreement are expected to be exempt from that, but it is that trade uncertainty alone that is causing traders to really flock to safe haven assets, including precious metals. So that's what's really given a lift to those prices. And then, of course, the companies that pull these metals out of the ground. So we're seeing a rally with Fortuna Mining, obviously, B2 Gold alongside, with also because of that management change that you mentioned. Equinox Gold was also on that list, Lundin Gold, and many others. So it was another one of those days where most of the top performers on the TSX were precious metals names, but even so, it was a down day for the TSX, as you mentioned. Heavyweights like Shopify were in the red. So that's the story there, Lindsay.
So interesting. We're also watching Sienna Senior Living. That's another gainer today. Briefly hit an all-time high. What brought that about?
Yeah, and actually did manage to end the day higher and got to that all-time high and was a sustained move. So another gainer today, Sienna Senior Living, those shares moved by over 4% at its highest point. And that's because the retirement residence company got a price target boost by TD Cowen, as the analyst Jonathan Kelcher said that the firm was entering 2026 well-positioned to continue benefiting from the continued strength in senior housing fundamentals. And that really makes sense when you consider over the next few years this wave of people who are expected to retire or age to the point where they may need some assisted living accommodations. So he also added that now that the company has achieved its 95% retirement occupancy rating, it can now focus on areas like rent growth and margin expansion. On top of that, we also had the team at Desjardins saying that last week's fourth quarter results were strong. They came ahead of expectations. They said that the company was also, continues to advance its acquisition and redevelopment plans. So it's really the strength coming off the earnings last week, and then just these glowing reviews from analysts to kick off this week. That's giving a bit of a lift to Sienna, and enough to make it another all-time high, Lindsay.
So interesting. Okay, that's Bloomberg's Stephanie Hughes reporting live for us. Stephanie, thanks as always.
Thank you.
And now we're going to look at some movers south of the border. Joining us is Bloomberg senior equities reporter Bailey Lipschultz. Bailey, it's good to see you. So we'll start with PayPal. That is attracting takeover interest from potential buyers. What's going on there?
Yeah, Bloomberg reporting that a number of companies are at least kind of kicking the tires on potentially acquiring PayPal or some of its businesses. This is a stock that over the last 12 months was down more than 45%. So these are some of the news headlines we're going to expect to see when you see some of these sharp pullbacks, broadly speaking. Did see a bit of a bid today, though it did not end near its intraday highs. Looking through some of the analyst notes, a number of folks on Wall Street calling out a couple of companies that could make sense as potential acquirers, calling out different aspects of the company's business were it to try to right-size those operations. Obviously, it does seem like it's a bit early in the preliminary days, but certainly one to keep an eye on in this merger Monday here in February. Again, when we are seeing a number of companies that have sustainably pulled back in terms of their share prices, that normally either leads to A, activists going after and trying to shake up business teams, or B, companies starting to talk to their advisors about what price could make sense. A couple of sell-side analysts said that valuation could be a turn or two higher from where it is. So that could entice some investors to want to maybe take on a bit of risk betting that PayPal will have some form of either sale or asset sale in the coming weeks and months.
So interesting. You're also watching AST Space Mobile, which has been awarded a contract by U.S. Space Development Agency. Tell us more about that.
Yeah, this is a big win for the company that has garnered a really strong retail and trader background or favor, if you will. As you can see, a pretty sharp day. The stock's still not really where it was at over a few weeks ago, has been kind of caught in that downdraft that we've seen as it relates to investors dumping space stocks, clean energy and quantum computing, some of the riskier areas. But when you look through some of the chatter on social media from those retail investors or even folks on Wall Street, it is a step forward for the company, because when you think about space, not only is it very complex and capital intensive, but it's also quite difficult. So a stamp of approval from the U.S. government does seem to be a step forward for a company that has raised plenty of money in the convertible debt market and should be looking to continue deploying cash to try to compete against SpaceX's Starlink.
Lastly, we were talking about this just a moment ago, or at least I mentioned it. Novo Nordisk's next generation obesity drug was less effective than Eli Lilly's in a head-to-head trial. So we were talking about Eli Lilly, but on the flip side, how do you think that's going to affect Novo moving forward?
It was terrible, at least when you look at the share reaction, the stock closing near the lowest level since summer 2021. So really giving back pretty much everything that it had gained around the euphoria around obesity shots. When you look at the analyst reaction on the Novo side, the big question is, are you able to actually compete going forward with a Lilly compound that has really dominated in all facets? This was a study that was a combination of Wegovy with another drug compound. The view was at least going to be that it could say it was comparable to Eli Lilly's injections, but that was not the case. So it does seem like we're seeing analysts and investors kind of saying maybe Novo Nordisk needs to rethink the portfolio. As you can see, this was a really boom then bust story. So the question going forward will be, if you're Novo Nordisk management, how do you want to address the future? Are you going to lean in and try to compete better with Eli Lilly? Maybe go out and acquire a small drug developer who has a differentiated technology? Or do you, for all intents and purposes, shy away from weight loss and maybe look at other assets that you're studying? The big question, though, when you're the size of Novo Nordisk, is this is not simply turning on one faucet and turning off another. It's a bit more complicated.
Absolutely. Okay, that's all the time we have. Bloomberg's Bailey Lipschultz joining us live. Bailey, thanks for that. Up next, U.S. markets declined today as investors continued to assess tariff uncertainty and disruptions related to artificial intelligence. We've got more on that in a moment. For more on today's market pullback, we're joined now by Peter Berzin, Chief Global Investment Strategist at BCA Research. It's good to have you join us, sir. Thanks so much.
My pleasure.
So we know now markets have shown resilience to tariff uncertainty in the past. Is the downward trend we're seeing to end the day today related to tariff uncertainty and that Supreme Court ruling last week, or is it something else, do you think?
I think it's right now it's mainly about tariffs, but I don't think it's going to last. Like, my advice to anyone watching is, like, don't listen to what Trump says, like, ever. Like, because he'll say something one day and just say something else the next day. Focus on the constraints that he faces. Right now, the major political issues around affordability, and whether Trump admits it or not, tariffs have raised prices, which means that he's going to be looking for ways to sort of pare back the tariffs regardless of what the Supreme Court has said. So I think tariffs are going to not be a key issue for the economy or for financial markets over the coming months. I think it's going to be much more of a story about AI, and particularly the ability of AI companies to monetize their technology.
You've also expressed optimism about the economy in light of current U.S. fiscal spending. But what macro factors do you think could potentially undermine that outlook?
I think the big risk is that we have a repeat of what happened in 2000, 2001. And March 2000, everything looked fine. The economy was gangbusters. Less than 1 year later, it was in recession. What happened? Well, what happened was that stocks went down. That led to a negative wealth effect. It led to less investment spending, and that pushed the economy into recession. I think there's a risk that I certainly see of something like that happening again, if again investors become somewhat disenchanted with the whole AI narrative.
Do you think that recent AI capital expenditures are driving GDP growth and kind of masking weakness in other sectors at the moment? And then I want to get back to your comment on the recession as well.
Well, it certainly has had an effect. We estimate that investment in computer technology lifted growth by around 0.5 percentage point in Q4. Now, some of that is imports, so I need to take it out. But I think the more important effect has just been for the stock market. Like real personal disposable income in December was less than what it was in April. There hasn't been any income growth now for over 8 months, and yet personal consumption expenditures, consumer spending has gone up. Why did that happen? Because the savings rate fell. And why the savings rate fell? Because people were digging into their savings and tapping the equity that they accumulated from the rising stock market. The risk is that this goes into reverse.
Is that one of the biggest factors then that could push the U.S. economy into a recession?
Yeah, absolutely. I mean, of course, you can come up with other possibilities, but I think the biggest risk to the economy is that the AI bubble does turn out to be a bubble. It bursts and it brings the economy down with it. I think that's by far the most pressing issue at the moment.
Do you think that that's likely? I mean, there's a lot of talk about this AI bubble. Is it a bubble? I mean, are companies spending too much? Is all of that reason for concern, I guess, for investors?
Yeah, absolutely. I mean, if you look at the analyst estimates right now, the hyperscalers are on track to invest something like $700 billion in this year. By 2030, if these estimates prove to be accurate, they'll be holding something in the order of $2 trillion in AI-related assets. Now, the average depreciation rate on these assets is around 20%, so average lifespan of about 5 years. 20% of $2 trillion is $400 billion. That's the annual depreciation charge that they face in 5 years' time. That's equal to their combined profits in 2025. So unless they can grow those earnings and sales very, very strongly, they're not going to be able to monetize all that investment. And by the way, we have a template for what that could look like. Back in 2000, Cisco was the world's most valuable company. The presumption at that time was that companies would continue to spend a lot of money on internet infrastructure. What happened, I think, is quite illuminating. Over the last 25 years, data traffic over the internet has grown by 42% annualized, and yet the amount of money spent on internet infrastructure has gone down as a share of GDP. So if these AI companies figure out how to run their models more efficiently, we won't need these trillions of dollars in investment in data centers.
Is that likely? I wonder about, due to these concerns that investors have on these big spending from these companies, are hyperscalers likely to kind of scale back investment plans in the coming months to try to meet investors in the middle?
They're not going to scale down the investment right now, but they're going to do that probably later this year and next year. And the reason we know that is because investors are now starting to punish these companies for massive CapEx. There was a survey done by B of A just a few months ago, which they updated more recently, which shows that for the first time in the history of their survey, and that survey goes back a long, long time, investors now think that companies are spending too much on CapEx. So no company wants to see its share price go down. If investors start to punish companies for excessive CapEx, you're going to get less CapEx later this year.
Okay, very interesting. We'll have to leave it there. We're out of time. That was Peter Berzin, Chief Global Investment Strategist at BCA Research. Appreciate your time. Thank you.
Thank you.
Well, the U.S. Supreme Court ruled tariffs illegal first. Then, of course, Donald Trump threatened 15% global tariffs. And now the European Union says it is postponing its vote on its U.S. trade deal. So we've got more on all of these developments coming up after the break. Europe has warned that trade agreements with the U.S. may be at risk following President Donald Trump's announcement over the weekend of a new 15% global tariff on all imports. So for more, let's bring in Sean King, Senior VP at Park Strategies. It's good to have you join us. Thanks so much.
Good to be with you.
A lot to go over here. So first off, I guess, do Trump's new tariffs that he's kind of threatened over the weekend, does that violate the agreement that's signed right now between the U.S. and the EU?
Yeah, pretty much. Ironically, it comes down to 15%. His new random tariff that he came up with through Section 122 is 15%, which is what the EU had anyway. But the thing is, it's not done on this so-called reciprocal basis that he announced on Liberation Day. He just pulled it out of thin air. And it can only last for 150 days. And it's illegal, as per the Supreme Court says. So the EU is like, why are we going to be bothering paying this investment and buying this energy and opening our markets if your own court's not even allowed to charge what you want on our products? So whether or not it's a violation, I'm not sure, but it definitely makes Europeans think, if it's 15% today, what will it be tomorrow? And what will he do after these expire in 150 days? And what happens if Democrats win Congress in November? What if Trump just decides to ignore the Supreme Court in general? Like, what are we dealing with? So I don't blame Europe for calling a pause on this and seeing what's what before asking its 27 member states to ratify this deal that was made based on another understanding.
Yeah, so you think that this is a good idea by Europe, the EU, to say it's going to actually suspend the ratification of this deal just until they get more clarity, or is there more clarity really coming?
Well, I am an American, and obviously I'm not in the business of advising foreign governments. But if I were the EU, I would totally wait and hold off. I don't blame them at all. This is a huge setback for the Trump administration. And I mean, would we negotiate anything with Europe if their own courts were telling them they couldn't do something? I mean, we would do the same exact thing. And I think we're just going to get more confusion going forward, because these tariffs will last 150 days. Then Trump's going to threaten to override the Supreme Court. Then he may lose control of Congress anyway. So anybody wanting clarity, they're going to be left wanting for a while, because I think things are only going to get more chaotic. I hope you didn't have me on the show to offer you answers, because I have probably more questions than you do, and I'm actually here.
No, I think at this point, most people know that we're kind of guessing what's going to happen, because things change so rapidly in this environment, right? But there have been a number of trade deals signed recently with the U.S. If you look at some of the U.S.'s Asian trading partners like Japan and South Korea, could what Donald Trump is threatening now jeopardize the trade deals that are already signed with those countries?
In some cases, yes. In other cases, no. And before we leave Europe, even though the UK is not in the EU, it is still part of Europe. And ironically enough, the EU trade deal, which is now called the Turnberry deal, was signed in Scotland, which is no longer on EU soil. Now, the UK is really getting screwed here, because their trade tariff on their products, which Americans pay, which this Supreme Court decision finally makes clear, the fact that we're even having a discussion about the cumbersome process of possible refunds to U.S. importers proves once and for all, despite what President Trump says, it's actually Americans who pay the tariffs and not foreign countries or companies. But the UK had negotiated a 10% tariff on its products. So now it's going up to 15%. So the UK must be very upset by what's going on. Same goes for Singapore, because they were down to 10%, as well as Australia and Saudi Arabia. But then, like, say, Philippines, they negotiated 19%, Vietnam 20%. And India is about to finalize a deal for 18%, but I heard their delegation canceled their Washington visit this week after the Supreme Court ruling. Now, three big Asian agreements: Japan, Korea, and Taiwan. Japan's a parliamentary democracy. And with her new supermajority, Prime Minister Takaichi, I see her picture there, great timing. She can run this through Parliament no matter what, the Diet. And the fact is, Japan's already the #1 foreign investor in the United States. So a lot of these deals were going to happen anyway, and they can sort of fudge it in terms of loan guarantees. And they've so far only put up $36 billion of their promised $550 billion. And whatever kind of tributary payments they have to make to Trump as part of some protection racket, they see it worthwhile to lock us into the alliance against mainland China and North Korea, because they're so insecure in the region, understandably so. Korea and Taiwan are very different, though, because they follow a federal system like we have in the U.S., where the president and the legislature are separate. So they have to sell it to the legislature. And neither legislature has approved the deals their leaders signed with Trump. Now, in Korea, it's the same party between the presidency and the National Assembly. So it's probably just pro forma that it's going to get passed. But in Taiwan, it's a very different story. You have William Lai of the Democratic Progressive Party, which despite its sound is not a left-wing party. And then you have the KMT and the TPP. They run the opposition and they want friendlier trade relations with mainland China. And they're promoting this idea of U.S. skepticism on Taiwan. And just this weekend, a KMT rep say, why are we turning over the crown jewels of Taiwan semiconductor to the U.S. if Trump's own court won't allow the tariffs?
Yeah.
So this could put into great jeopardy passage of the agreement as it regards Taiwan.
We have just 1 minute left, but I want to get in one last question. Donald Trump preparing to meet with Chinese President Xi Jinping in April. Does this threat that he's making kind of give him less leverage in terms of negotiating now?
Definitely, because Xi is playing the long game. He is also focused on his own sense of decoupling. He doesn't want to depend on us for any technology, especially when we can put on further export controls. I support decoupling anytime President Trump wants to get tough on the PRC. I know you guys want to sell him your canola, but it's bad news over there. So I would say stay out of mainland China. But now Trump knows that Supreme Court is going against him. So this definitely gives Xi Jinping leverage in dealing with Trump. And obviously, they'll also argue about Taiwan and whatever else.
Yes. Okay. There's so much to go over. Sean King, Senior VP at Perk Strategies. Really appreciate your insight. Thanks for joining us.
Thank you.
Canadian energy company Emera reported weaker than expected fourth quarter results. We will bring you our conversation with the president and CEO of Emera after the break. Stay with us. Loblaw shares were up today after the corporation says it will invest $2.4 billion in Canada this year. Now, the plan includes new Shoppers Drug Mart pharmacies and discount grocery banners such as No Frills. The company is also continuing construction of a large automated distribution center in Ontario. Loblaw says the spending will create 9,000 new jobs and is part of its broader 5-year investment plan. Shares of Arcelix soared today after Gilead Sciences said it would be buying the biotech firm in a deal valued at about $7.8 billion US. Gilead will pay $115 per share in cash, plus a potential additional payment tied to future sales. The acquisition strengthens Gilead's oncology pipeline, adding a promising cell therapy for multiple myeloma. Gilead has been looking to diversify beyond its core antiviral medicines. And shares of Winpac were down today. That's after the machinery manufacturing company posted revenue as well as profit that fell short of analysts' estimates. The Winnipeg-based firm says weakened customer demand within several categories was prevalent during the quarter, and it warns that the majority of U.S. foil import tariffs will continue to be passed on to customers. Merck is reorganizing its pharmaceutical business, creating a separate division focused on cancer drugs as it prepares for sales pressure later this decade. Its blockbuster immunotherapy drug is set to lose U.S. patent protection in 2028. Merck says the move will help it sharpen its focus and support more than 20 upcoming drug launches as it works to offset the expected decline in revenue for the popular drug. Nova Scotia-based energy company Emera has reported a drop in fourth quarter earnings, but adjusted earnings for the full year were higher. The company plans to focus on executing its $20 billion capital plan and has extended its EPS growth target through 2030. For more, we were joined earlier by Scott Balfour, President and CEO of Emera.
2025 was a record year for us with our adjusted earnings per share up by 19%. And the real driver for that is our businesses in Florida, which now represents about 72% of Emera's earnings today, and is really the driving force behind our growth in 2025 and our forward-looking growth as well, including most of our capital deployment.
And gas is it's not a rounding error. It was almost $300 million in earnings last year. Where are your gas assets?
Yeah, so currently we have two gas utilities, one in the state of New Mexico, which we're actually in the process of selling, awaiting a final regulatory decision there that we expect sometime any day now in terms of a recommendation on the closing of that transaction, which we expect to happen before the end of the second quarter. And then in Florida. So in Florida, we actually have two businesses, Tampa Electric serving electric customers in the greater Tampa area, which represents about almost 60% of Emera today. And then the other is Peoples Gas, which serves about half of the gas-connected customers in the state of Florida today and is one of the fastest growing utilities in the country.
So your stock trading near record highs right now. It's had a great run. Your profit per share jumped last year, was almost $3.50 a share, up from just under $3 in the previous year. But there was a decline in the fourth quarter. Why was your profit down in the latest 3 months, Scott?
Yeah, largely as a utility, we're fortunate that we have pretty good insight and foresight into our earnings profile. It's one of the things as a sort of a company that owns a number of regulated utilities is providing stable and predictable earnings and cash flow to deliver value to shareholders. But we do get at times impacted by weather. And so in the fourth quarter of 2025, we had sort of more temperate weather, particularly in Florida, that just meant our earnings for the quarter were a little bit lower. But of course, as you highlighted, for the full year, our results were very, very strong.
Is Florida seeing much in the way of construction for data centers? I was wondering, does that point to bigger demand for you?
Yeah, it's a really good question, Andrew, and certainly data centers are a big part of the story for electric utilities today in the United States. Florida has not been front and center in that discussion, but it is increasingly happening now. We are in a number of advanced discussions with a number of large load type customers, data center type customers, and we're quite optimistic that we'll see some traction with that this year in 2026.
I'm just wondering, because Florida's hot, does that make it less attractive to locate a data center? You might have extra cooling costs?
Yeah, you're picking up on a good theme. However, electricity costs in Florida are also lower than in many places, and the reliability of the electric system in Florida is actually very, very strong. In fact, leading the nation in many respects. And of course, it's hot in other places that has a lot of data center activity going on, including Louisiana and Texas. So Florida's not unique in that way, but it does have a lot of things to offer an advantage. And one of the most important, of course, is there's capacity. There's generation and energy capacity to be able to serve these customers, and that's certainly why we're seeing some interest with some potential customers at Tampa Electric.
Yeah, that's a bit of a sore topic, apparently, in many parts of the U.S. People blaming data centers for pushing up electricity prices.
Yeah, and it's interesting because, yes, that's true in some regions, but in the regions that we operate are mostly integrated markets where as a utility, we're not just responsible for the transmission and the distribution of the energy to customers, but also the generation, which means we have the planning cycle for all of it to make sure that we have enough energy for all of our customers. And of course, one of the really important things when we're pricing these large load type customers is to make sure that they're paying 100% of the incremental cost to serve them, plus a little bit more. And in fact, I think the real story with data centers moving forward is how it will help customer affordability, as opposed to in some markets. I know that it's been more of a challenge, but certainly in Florida, in our conversations with Tampa Electric, we see this as a story that actually will help affordability issues with our customers.
Sorry, what do you mean discussions with Tampa Electric? What is Tampa Electric your operation there, or?
That's right. Tampa Electric is our largest business today, almost 60% of Emera today, and they're in a number of conversations with prospective data center type clients.
So if you were to put in new gas-fired capacity, it must be a bit exasperating, though, or is it frustrating trying to get contractors and equipment? There's such a building rush in America. Is it hard to even get them on the phone?
Yeah, well, I think one of the challenges that everyone is working through is long supply chains for major key equipment like gas generators and transformers, which is why we've shared that we're actually already in a queue for 2 large gas turbines, GE turbines that we expect to be delivered in the next couple of years in order to serve the growing needs that we've got generally for all of our clients, including prospective data center type clients. So yes, it's a challenge that everybody's working through, and maintaining trusting relationships with the contractor community, with the major equipment suppliers is certainly part of what has us excited about the prospect for us in Tampa in particular around serving some of these new large loads.
Sorry, we're tight for time, but your dividend yield just over 4%. Can you remind us what is your policy on the dividend? Do you try to increase it every year?
Yeah, in fact, we've increased our dividend for the last 19 years in a row. And our guidance to investors is we will look to continue to increase the dividend each year in the range of at least 1 to 2%.
1 to 2, so not massive growth. And you declare, is it usually in the fall that you raise the dividend, or?
That's exactly right.
Okay.
Yeah, we usually make that declaration in the fall. Of course, that's a board influence decision, but that timing usually in the fall.
That was Scott Balfour, President and CEO of Emera. Up next, Canadian bank earnings are on deck this week. Will the ongoing trade uncertainty cap profits? We've got more on that next. Many of the big Canadian banks are set to report quarterly results this week. And for more on what we could see, let's bring in Paul Goldberg with Bloomberg Intelligence. It's good to see you. Thanks so much for joining us. So we'll get started here. You're saying you're expecting modest revenue and earnings growth from most banks this week. Is that right?
Yeah, that is correct, Lindsay, and thank you for having me. So we, at a medium for the 6 banks, we expect about 5% revenue growth. The earnings could be a little bit better, maybe about 7% at the medium, and we don't really see any particular surprises from an individual bank on the upside or the downside.
You also say you expect cost control to still be a key driver for most banks. Can you explain that in a little more detail?
Yeah, it definitely will be, and this is what's driving the earnings growth slightly better than the revenue growth. All the banks went into the year with their promise of maintaining the positive operating leverage. So that will be a key. It might be a little bit of a challenge in the first quarter as a bit more expenses are coming in, but their guidance and where they are in the quarter is definitely going to be very important. I think they're going to keep their growth in the mid-single digits, I would say.
When it comes to loan exposure, what are you expecting in terms of loans to software companies in particular?
We've actually done some analysis, and the banks disclose things quite differently in terms of the segments within their loan books, but we do think those are fairly small. So for the entire loan book, including commercial and retail credit, it's probably less than 2% for most banks. For the commercial book itself, it may be up to 3%, but it's still very manageable.
What are some of the other, apart from that, like other headwinds or other kind of obstacles, challenges that these big banks are going to be facing in the year ahead? Or do you expect them to be talking about in these earnings reports coming out this week?
We think the loan growth and the economy and the exposure to trade uncertainty, those probably still going to dominate the conversation. Loan growth, the banks kind of guided to mid-single digit growth, in some cases a little bit better. It might be mid-single or even a little bit softer in the first quarter. So people are still kind of shying away from a lot of activity. January home sales were not great. They came down a little bit. So there is a lot of pressure on the loan side, both retail and commercial. That's definitely going to be a thing. In terms of trade, obviously, there is trade developments here in the U.S. that, in fact, might actually, for immediate purposes, reduce a little bit of a tax burden for Canada, maybe from slightly higher single digits to more of a mid-single digits, but not a very large shift. I think what we're going to have to wait for another 4 or 5 months into the summer as we get a review of the North American trade agreement. That's kind of going to be the key, because that's what allows Canada to operate.
Yeah, big hurdle for a lot of companies. Okay, that's Paul Goldberg with Bloomberg Intelligence. Appreciate your time. Thank you. Well, violence erupted Sunday in Puerto Vallarta, Mexico, a popular vacation spot for Canadians, and a military operation against the Jalisco New Generation cartel killed its boss, known as El Mencho, decapitating the country's most powerful drug cartel. And for more, we were joined by CTV's Scott Hurst.
Lots of concern about how it's impacting residents and tourists alike, as Puerto Vallarta is one of the more popular destinations in Mexico for Canadian tourists, not just during popular school holidays like we just had the Family Day weekend. And of course, there is March break coming up in a couple weeks, but many Canadians go down there for an extended period of time to get away from our winters and enjoy the sunshine and beaches in Mexico. But right now, they are caught in a significant amount of violence as this popular Mexican beach destination is on edge. The violence triggered by this military operation that you mentioned against one of Mexico's fastest growing criminal networks, the Jalisco New Generation cartel. Mexican forces killing its leader, the man known as El Mencho, during a shootout as the military attempted to capture him. Cartel members then responded viciously and violently, creating a chain reaction with even more violence sweeping across the state of Jalisco to block military operations. We did hear from Mexican President Claudia Sheinbaum this morning, who said all the roadblocks have been cleared and is trying to urge calm, saying authorities are doing their best to ensure that residents and tourists alike are kept safe throughout this military operation and the retaliation, Andrew, from the cartel members.
Lots of travelers, though, stranded right now, including many Canadians. What's the advice for Canadians?
The advice for Canadians and other travelers alike is to shelter in place. And the advice coming from the Global Affairs Canada is to keep a low profile, limit your movements, and listen to local authorities about the possibility of trying to move about the city, about the region, and potentially trying to get to the airport. Global Affairs has updated its travel advice to Mexico to exercise a high degree of caution with added regional advisories that include Jalisco and Puerto Vallarta because of the security situation and the outbreak of violence. It is difficult for Canadians to get out, to get home, because Air Canada, WestJet, Canadian Airlines have canceled all flights to and from Puerto Vallarta as this violence has erupted, trying to work with customers on other options. But of course, the security situation takes precedent because it is so pressing and so volatile right now, and the fears that it could continue. Foreign Affairs Minister Anita Anand says the Canadian government is watching the situation closely. We're expecting to hear from her later this morning in the 10 o'clock hour. So hopefully at that point we can get more information on what this means for Canadians, the advice for Canadians, and the attempt for so many of them to leave Mexico and get back here safely, so that they're not caught up in this ongoing violence between the Mexican government and cartels.
That was CTV's Scott Hurst. Well, with earnings season about to kick off for Canadian banks, we'll hear from the CEO of the Bank of Montreal right after this. BMO Capital Markets is hosting its 34th annual Metals and Mining Conference this week in Florida. And for a look at the mining sector, as well as the bigger picture issues such as tariffs and the Canadian economy, our partners at Bloomberg Television spoke with Darryl White, CEO of Bank of Montreal, live from the conference.
It's very important. When I step back and think about what we're hosting here this week, it really is the greatest metals and mining show on earth. We've got in the neighborhood of 7,600 one-on-one encounters that we're coordinating and hosting. We've got 350 capital providers, which is the most we've ever had in our 35 years doing this. And we've got over 600 corporates who are here as well, taking part in a really important conversation, I think, in this moment in time, in particular, when we think about the global forces that are colliding into the critical mineral space. This is a very important conversation at a very important time for the economy and for the future of the next 5 or 10 years of our resilience agendas.
Darryl, we'll get into exactly what the demand could look like, which metals are going to be priority, what the production plans are going to look like. I am curious how much people there are talking about tariffs this morning, given the IEEPA ruling by the Supreme Court, the fact that metals might be among some of the most affected.
Yeah, Lisa, I think it's early days. I mean, the announcement's a couple of days old on IEEPA. If you look at the market reaction, it's been pretty subdued, as we've all been talking about this morning. I think part of that is because some of the outcome that we saw over the last few days was probably priced into bond markets, so we haven't seen much of a reaction there. And if you talk to most of the corporates that we're dealing with, the reality is over the course of the last year or so, the instability and the volatility that's been brought by various decisions over the course of the last year on tariffs have become a little bit more normal course. So in the meantime, they've rebuilt supply chains or organized themselves in different ways to have resiliency in how they think about dealing to surprise, or maybe not such a surprise, as the case may be, depending on the audience. So in the meantime, more stable than you might think.
How much do you hear also a discussion around domestic production and expediting some of the licensing around getting, say, for example, the copper mine in Arizona up and running at a time when there is this priority on metals of all sorts?
Yeah, that's a live conversation. I mean, I think it's a very important one, because if you think about the confluence of two forces, we've got the demand being driven by the AI power up. So the newest industries are literally dependent on the oldest industries. In addition to the global order reorganizing at the same time, there's a massive demand push here. And the response to that at the end of the day is going to hit a bottleneck on the supply side. So the needed reorganization of permitting, of getting to market faster, of regulatory reform is a really active conversation. And I think, as you know, we're seeing some positive developments on that, particularly here in the United States.
Are companies feeling confident right now, though, to pour money into the United States in this sector?
I think companies are feeling confident, and perhaps more importantly, we've got investors who are feeling confident and trying to pick their spots. And when we look at the North American continent, it's particularly attractive. There are other places in the world that are attractive as well, but they may come with a higher risk premium.
Do you see consolidation in this space? I know there was potentially going to be a Rio-Glencore deal that fell through, but do you see potentially that this space right now, given everything you've described, is ripe for more consolidation?
Yeah, there is a lot of talk of consolidation. We've seen a fair bit of consolidation over the last 6 to 12 months, haven't we? And right now, if I look at our own internal pipelines, they're as full as they've ever been. Our teams have been responsible for advising on 70% of all M&A activity that we've seen in the sector globally in the last 4 years. We expect that to continue as we go through this year, and the conditions, both from a capital perspective as well as the efficiency perspective of the producers, are pretty constructive for that consolidation theme as well.
This is a space that the Trump administration has taken aim on to take actual equity stakes. Has that been positive, or is that concerning to the individuals you're talking to, because potentially it means less competition?
Yeah, but I would say on balance, it's a very good question, but it's generally been positive because it feeds into the narrative of needing more reliable, bankable solutions on particular demand signals. So we've got a demand signal, we can set a floor. Capital craves certainty, as we know, and certainty isn't a luxury. Certainty is something that folks need in the sector to make those investments. So on balance, well structured, these are considered fairly positive interventions. And we're seeing other countries around the world slowly follow step and look at projects like these as well.
Daryl, there is a lot of controversy, certainly in Montreal. I was just actually in Montreal just not a long time ago, and I was overhearing people saying that they're trying to avoid going to the United States. And you could definitely feel a certain sentiment there. Has it made it difficult for you, being both in Canada as well as having increased your U.S. platform, to navigate the growing tensions between the two countries?
Yeah, look, we've been doing business for 208 years, and 207 of them we've been in the United States. So this is a long game for us, and it'll be a very long game for us. We're committed. We continue to be committed to both countries, almost in equal measure. They're very important client bases for us, and we continue to run our strategy as we always have.
How much do companies on a cross-border level have difficulty making decisions about deal making, about investments, when you do see such an uncertain landscape that will affect the long term potentially, right? I mean, you think about the USMCA that could get renegotiated. I mean, how much is that affecting some of the discussions that you hear on the ground there?
Yeah, it is affecting the discussions for sure. I think what you've seen is we're now about a year into the volatility that we've seen around uncertainty of tariffs, all kinds of tariffs. But over that period of time, corporates move pretty quickly. They're able to reorganize their supply chains, make decisions based on the path of most certainty, not least certainty. And you do see some reorganization going on there. And our bankers here have been there to support them through all of those discussions.
building on Lisa's point and putting hockey aside, we have seen a more acrimonious tone coming from Washington to this government when it comes to Prime Minister Mark Carney. I would just love your reaction from his speech at Davos, which didn't name the United States, but there was that tone that he was calling out the U.S., forcing allies to pick between China and U.S.
Yeah, look, I think in the end, if you look at the economic cooperation between the two countries over a long period of time, we have no anticipation that that's going to change. In the meantime, if you look at some of the middle powers of the world, Canada included, are there things that we can do for our own agendas, that we can consider what's going on right now as a bit of a wake-up call, whether in the country of Canada, it's interprovincial trade barriers, it's productivity and efficiency of our own, are diversifying our trade relationships at the same time as we preserve a wonderful relationship with the United States for the long term. Those are all good things.
You also in the past talked about how Carney should be cutting taxes. You don't think that Canada is competitive on tax. Do you like what you're seeing out of the Carney government?
I do, and I will also underscore that it remains early days. The government has been in power for a little less than a year now with a full mandate. There have been some changes that are positive. There are more changes along the lines of competition, along the lines of competitiveness, along the lines of competitive tax that always should be considered through any government, but I think we've seen material progress over the last year.
That was BMO Chief Executive Darrell White speaking with our partners at Bloomberg Television. That does it for today's program. Thanks so much for joining us.